Hey, Robles. My name is Tamiya Robles. I am the owner of FixMyCreditNow850.com. I am a credit expert, and periodically I do Zoom trainings just to let everybody in on what's going on, any changes, education, things like that. So right now I'm going to start the PowerPoint, and what we're basically going to discuss is understanding what FICO scores are, who uses them, and the interest rates. So I'm going to share my screen. And if for whatever reason you cannot see the screen, you gotta let me know. Sometimes that happens with Zoom calls. Okay. All right. And I will eventually, you see it good. All right, cool. Thank you. All right. And I'm going to also periodically use my pointer, especially when we get to a particular chart. You'll see, if you see a red dot, that's just me using a laser pointer. All right. So again, this is just the intro. This is who I am. This is me here. All right. And then basically a little bit of who I am. What do? I am the CEO or the owner of FixMyCredit850.com. I'm a credit restoration specialist. Some people call me a credit expert. It has a bunch of different names, but I fix credit in a nutshell. I'm what you call a factual disputer. What I do is I don't really care to know a person's backstory. At the end of the day, whatever the issue is, it's on the credit report and it needs to come off. So I basically dispute with the credit bureaus what should and should not be on, well, which should not be on the person's credit report based off of their rights under the FCRA. So I only care about the facts. So that's what I am disputing. That's what my letters reflect. I do work closely with real estate agents, brokers, lenders, banks. I can work with anyone, but on an average basis, this is the industry I mostly work closely with. I'm also the president of a nonprofit organization called The Movement. We are a nationwide community-based nonprofit organization. So if anyone's interested in joining, participating, donating, sponsoring, just let me know. I'm also a member of my local chamber of commerce. I create businesses and I help build business credit and do student loan consolidation and forgiveness. Just wanted to do a quick resume in case you're wondering what it is that I do. So what we are going to discuss today is what FICO scores are, the differences between credit score ranges, how FICO scores are calculated. FICO score ranges from Classic to FICO 10T, which is the latest FICO scoring system. I did another video on that. I have to pump that out often. So if you're part of any of my groups and you are realizing I keep repeating certain training classes, it's because a lot of people need to know this and they don't know. So I try to make it a point. Thank you. I try to make it a point to keep repeating the same thing until more people are educated. Also, we're going to talk about what industries look at which scores. That's pretty important, and the difference interest rates make with all the scores. So I broke it down pretty easily. It's pretty easy to understand. So right here, I gave you two visuals, two charts. So I'm going to use my laser pointer. So again, if you see that red dot, that's just me. Okay. So FICO scores and their ratings. Do you have the chart here if you're into colors, if it's easier, and then you have another chart here. But the scores range from literally 300 and could go as high up to 850. I'm strictly talking about FICO. I'm not talking about Vantage score. Okay. Vantage score is something we can talk about at another time, but when you're dealing with mortgages, lenders, they're looking at FICO scores. Any sort of lender, I don't know of any lenders that are looking at Vantage, so mostly FICO. And these scores there's a huge difference between these scores. You have poor, fair, good, very good, and exceptional. I don't really, once you get past 750, there's really not that much of a difference here, but this is how FICO has broken these down. So poor is well below average, fair, below average. Many lenders, they'll approve loans, but you won't get the best interest rate, and you'll see that in a minute. You'll also see good. People do strive to have good credit, but you always want the best, but it's near or slightly above average. Most people that I work with, they do have fair to good credit. Very good and then exceptional. These are above average credit scores, as you can see. So you can see it on this chart, and you always want to be in the green. When I teach my students about credit and credit repair, I always tell them, look at the colors when all else fails. If you don't know, green is always good. Green is money, opportunity, green light, go ahead, and red always means slow, not good. All right, so now we're going into how FICO scores are calculated. So this chart, this pie chart should be pretty familiar to you, okay? You might have seen it very often, but you have it as 35% covers the payment history. 35% of the FICO calculation is the payment, okay? 30% is for outstanding debt. 15% is the credit history length. 10% is the mixture of credit the client has, and the 10% is the pursuit of new credit. So I'm actually going to break each one down so that you can clearly understand what it means and what the lenders are looking for. We're going to get into that. So the 35% is the first thing that any lender wants to know is whether you've paid your past credits. Your debt. Are you paying on time? This helps the lender to figure out how risky you are as a potential client. So if you're high risk or low risk, that is the whole point of having a FICO score in the first place, to determine if you're high risk or low risk. So this is pretty major when determining what your credit score is, because if you're missing payments and your credit payment history is poor, more than likely you have a low credit score. All right. Close to that is the 30%, which is the outstanding debt. This is how much debt is owed. Okay. So having credit accounts and owing money on them doesn't necessarily mean you're high risk, but it again can affect your FICO score. But if you're using a lot of your available credit, this may include that you are overextended, and banks look at that as high risk. So I'm not a mortgage lender. I do deal with lenders very, very often. Most of my clients are trying to fix their credit so they can purchase a home. One of the things that the lender calculates is your debt to income ratio. And this 30% is what they're looking at. How much debt is owed? Okay. So if there's a ton of debt and then your income is low, again, that client becomes high risk. Now we're looking at 15%, the length of credit history. This is 15% of the calculation. So in general, having a longer credit history is positive for your credit score, and we're going to get into that. But it's not a requirement, which is true. It's not a requirement, but it does affect your credit score. If your FICO score takes into account how long your credit accounts have been established, including the age of your oldest account, the age of your newest account, and the age of all of your accounts. So I try to tell my clients and my students that your credit score overall is an average. It's a mixture of everything that you see here. That determines your credit score, and it can fluctuate. If you have a great payment history but extreme outstanding debt, your credit score is going to be different from someone who has no credit history, no credit mixture, but they have great payment history and very little debt. This all fluctuates. It's all different, right? How long it has been since you use certain accounts. I was on the fence with that when I saw that. How long it's been since you used certain accounts? I haven't seen too much of that being an issue with my clients, except if they have a debt that is just not used at all, which usually comes in the form of credit cards. So I tell clients that are done with credit cards, actually don't just toss it. Use it every once in a while and let the bank close you out. It makes a difference with your credit score, believe it or not. But I was hesitant to post this, but I wanted to give all the facts that FiCO gives in case anybody wanted to discuss that. Your credit mixture is 10% of your overall FiCO score. 10% seems like a small number. However, it makes a difference with your credit score. I've seen that with many of my clients where it's like their overall credit is really good, but they don't have enough of a mixture. And they're saying it's 10%, but I've seen it truly affect a person's credit score where they couldn't get past a certain credit level, which is usually around the low 600s because they didn't have enough of a credit mixture. So 10%, that's what they say, but you know, every credit profile is different, like I said. FICO scores will consider your mix of credit cards, retail accounts, installment loans, finance company accounts, and mortgage loans. Don't worry, it's not necessary to have one of each. It's good to have one of each. It's good to have multiple of each. It's good to have multiple credit cards, multiple cards. You might have, if you have a significant other and they you want to be a co-signer on their car and vice versa, that looks great, especially if you know they're going to make their payments on time or you're making the payments on time for them, or if you have a child, you purchased a car for them, that looks good. So you'll have your significant other, your child, and yourself. You got 3 auto loans on your credit report. Then you have a couple of credit cards. Then you got the mortgage, then you got the summer house. That is what you consider a good mixture of credit. And that looks good because it diversifies your credit portfolio and it makes you yourself seem more trustworthy. It tells the banks, not only can you can trust me with your money, but look at the other industries that trusted me with money as well. So it's pretty good. New credit. This I like. This is basically inquiries, right? It is 10% of the calculation, the small percentage, but an effective percentage. Again, some clients can't get past a certain percentage because they have too many inquiries. Inquiries are pretty easy to get off, believe it or not. I created an ebook where you can get your inquiries removed for free. So anybody that wants that, definitely let me know and I'll send that to you. Just shoot me your email address and I'll send it to you. All you have to do is follow the script to the T. It's an old hack that worked during the pandemic. It was super effective. And then people overused it, so it wasn't as effective. And now they forgot about it. So it's like, okay, it's working now. But yeah, thank you for that. I got you. As soon as we're done, I will send you the ebook. It says research shows that opening several credit accounts in a short amount of time represents a greater risk, especially for people who don't have a long credit history. I agree with this 99% of the time. Okay, so 99% of what they're saying I agree with. The only part I don't agree with is the fact that they're saying opening it up in a short amount of time. Yes and no. It depends on what they consider a short amount of time. So if you're constantly opening accounts, getting credit cards is usually the main thing. I don't know anybody that gets a whole bunch of cards. Maybe if you're doing Turo or renting your cars, or you have some sort of, if you're in the car industry of some sort, anytime you're constantly getting your credit checked, we'll say that, whether you're asking for it or not, that is going to negatively impact your credit score, right? So here's an example what it could mean a short period of time. A lot of my customers, I fix the credit and they're like, great, I'm going to purchase a car. I hate that, but you know, whatever. You don't put the car before the house, by the way. So they will go, great credit now, I hook them up. They go to a dealership and they don't get the car because they kind of were shopping. But that lender decided, that card company decided that they were going to basically put their social security number through all these banks and run it through all these lenders, right? You might have seen that before with your own. What they're doing is they're running your credit report and it comes back as a new inquiry, back to back to back to back. And this is happening in minutes. So I don't know if you've been to a car dealership, you're sitting down talking to them, you're like, yeah, I'm considering to purchase a car. And then they say, great, give us a minute. And then they're gone for, I don't know, 5-10 minutes. Your social security number just went through about 30 banks. So that's considered new credit in a short period of time. Also, if you're house hunting or you're trying to find the right mortgage lender, believe it or not, when you are searching for a car and a house, that doesn't negatively impact your credit score because the bureaus understand that the consumer does shop. So how to fix that is literally call the credit bureaus the next day and say, hey, listen, I went to a dealership, I was shopping around for a car, I didn't find what I want. Can you remove these inquiries? Because the inquiries are supposed to connect to an open account, an account that you did get a loan from. And if you're just searching for a car or a house, it's not worth keeping on, but you have to do that within 30 days. If not, it's a little harder to get the inquiry off. Okay. Now, if you're just trying to get a whole bunch of credit cards, nobody really shops around for credit cards. That's why they have, I have a list if anybody wants this. I just posted in my Facebook group, but there are ways to get pre-qualified for a credit card without getting inquiries and being looked at as having new credit. Okay, got you. So the ebook and the chart. Okay, so it's an Excel spreadsheet of all of as many companies I could get together. We could pre-qualify for credit cards first. So again, you don't want it to look like you're begging for money because that's the issue. Inquiries are like, hey, I need money. Somebody give me money. Anybody, everybody give me money. And that makes you high risk. It makes the lenders look at you sideways like, I don't know who this beggar is, but they're not going to take my money. So you just want to reduce that. Okay. But as far as an inquiry here and there over 2 years, because inquiries are only supposed to be all there for 2 years, that's not really a big deal. You just want to have your clients have really no more than 3 or 4 inquiries, but it's very easy to get off, so don't freak out. Now we're going to go to the multiple FICO score types. This is pretty important, and this is why I have my little trusty laser here, okay? I'm not sure if you know, a lot of consumers don't know, a lot of real estate agents don't know, the underwriters probably do know that there are several types of credit scores, right? Now there's multiple bureaus. There's like, I always get the number wrong, but I think it's like 35 credit bureaus, but these are the main 3, Experian, Equifax, and TransUnion. This is a separate entity than FICO. So FICO holds your credit score and it reports to the credit bureau. The credit bureaus are strictly solely a data reported furniture company. So they're just there to give you the report. That's it. Okay. Now the FICO, we discussed how they created these numbers, but they have different versions of the numbers. So the oldest version, which is not on this, I don't see it on here, which is not on this chart, is called the FICO Classic. That is the oldest FICO scoring system. After that, it's the FICO 2, FICO 3, FICO 4, FICO 5. There is no FICO 6. There is no FICO 7, FICO 8, FICO 9, FICO 10, and FICO 10T, which 10T is not on here. We're going to get into that in a minute. And again, I did do a whole video on the FICO 10T. You will constantly see me doing Zoom classes explaining FICO 10T because it's going to destroy a lot of lives, right? So it's going to mess people up. But the FICO Classic and the older versions are not usually used often. They are only used by mortgage companies, okay? Well, I'm going to actually take it from the top and go down the chart. So the most widely used FICO score is the FICO score 8. Okay, FICO scores come out every 5 years, but it is such a delay. The 5 years is supposed to give all the lenders nationwide time to catch up, in a nutshell, and they give it about 5 years. By the fifth year, most companies have caught on to the fact that they're using a FICO, the current FICO scoring system at the moment, but most industries don't really care. So we're outdated. This is the FICO 8. If you purchase a My FICO account, and you pay for the premium package, which I encourage everyone to do if you want to know what all your scores are amongst all 3 credit bureaus, it's going to instantly show you what's called your consumer credit score or your FICO 8, which is the most commonly used FICO scoring system. Okay, it's outdated. So this score is usually more forgiving than the older scores. You can have some collections, you can have negatives, you can have late missed payments, new credit, whatever. Over time, your score will gradually go up, even with the negatives on your credit score. It's more forgiving. Once you start chipping away at the older credit scoring systems, like the 3, the 2, the classic, they're less forgiving. They don't care what positive changes have been made. They solely focus on the negative, and your score looks completely different than what it does compared to a newer scoring system. So 8, 9, 10 are considered the newer models. So this is used when you want a store card, if you gas cards, if you're just getting something basic, this is what they're looking at. But if you're trying to purchase a car, the auto loan applications, they use these credit scores. They're completely different. And I can show you a live FICO chart if that will help you out. But yeah, it's completely different scores. Some of them use the FICO 8, FICO 9, FICO 2. These are completely different scores. Actually, I will show you. I'm going to explain the chart and I'm going to show you a live version with one of my customers. She allows me to use her FICO score in her My FICO as part of the training. But then you have credit card companies. They look at 9, FICO 9. During the pandemic, FICO 9 is what was being used at the time. And then FICO 10T came with only FICO 9 being out for about 3 years. That's, again, a whole other, I have my own opinion with that. I think it was intentional. Then they look at bank scores 8, 4, 3. I don't know what credit card company goes this far back. I am aware that they use 8 and 9. I am not aware of any credit card company that goes this far back. As far as this auto score 4 and 5 and 2 is too old. Auto lenders don't even know what that is, I promise you. Most people on average are looking at 8, 9, barely 10, because 10 is just too new. Mortgage companies, like I stated, they do look at classic 2, 4, 3. That is major, okay? And then we have the most recent credit score, FICO 10T, and FICO 10 and FICO 10T is extremely, it's different because, in my opinion, it was the response to people making a lot of positive changes very rapidly during COVID because they had the time to sit at home and focus on their finances and do better. And I think this was FICO's response to that. So the FICO 10, it focuses mostly on missed payments, right? And credit card payments, how you make your payments. Now, it always did. All of these scoring modules focus on that, but in particular, FICO 10 zeroes in on that. Okay, so before, if there was a missed payment, if you or your client had a missed payment, it might drop your score. 30-day missed payment might have dropped your score, I don't know, 20, 30 points, depending on what your overall credit profile looks like. Now with the FICO 10, I've seen a missed payment, 30-day missed payment, 70 plus points drop. Okay, and that's just with the basic FICO 10. Now, FICO 10T is non-existent. No one's ever had T. T stands for trending. As you can see, none of these FICO scores have T next to it, but the FICO 10T goes back in time 2 years. And they look at how you were 2 years ago financially, and they figured out how you were as a consumer, and they judge you by your past, right? And they make your credit score based on how you used to be, not where you are today. So within the past 2 years, if you were like, you got credit repaired and you started making payments on time and you're doing great, your credit score is up now, you're in the 850s or whatever, you're at 850, FICO 10T could care less. They're gonna say whatever, what happened 2 years ago. And if 2 years ago you were at a 520, then it's going to make a noticeable difference. So let me actually stop sharing for a second with you guys. And I'm going to show you a live version of what your FICO score looks like using my client. So I'm logging in, and I appreciate her so much because she's probably my favorite client of all. And she understands that I teach this stuff, but it's best to have a live visual, as opposed to me just putting up a PowerPoint and just going. So she was actually, and I'm about to share the screen now, I just wanted to make sure you guys can see it. But where'd you go? Where'd you guys go? This client actually was, when she came to me, her credit score was pretty good. No, it was decent, but she had collections that needed to be removed. Okay. When that, when I fixed her credit, I got her credit score up. She was perfectly fine, and she ended her services naturally with me, which makes sense. Okay. The problem with that is eventually FICO 10T hit and it dropped her score, and she was devastated. A lot of that too had something to do with, okay, for whatever reason, my Zoom is acting up. A lot of that completely messed up her credit score. Okay, here we go. All right, so I'm going to share the screen now, and just let me know if you can see. You should see what's her FICO score. It says my FICO. Just let me know if you can see it. Okay, got it. Okay, cool. When she started with me, this particular, my FICO software does not allow me to go way back when, but she was, I want to say, the low 600s, if not 500s. She makes a lot of money. She makes good money, especially back then. Very responsible, but life happens. You know, she had collections and charge-offs and inquiries. So I had to clean it up, and she had a student loan. I sure will, Alex. Sure thing. I got you covered. Thank you. But again, this is before the FICO 10. The FICO 10T came out, right? Pretty major. I fixed it. Her score shot up. And since then, she's been fair, but look where we're at. I wish I had my red pointer. So we're at the FICO score 8, right? So when you log on to my FICO, you're going to see FICO score 8, which is outdated. Remember, it's outdated, but most companies are using FICO score 8. They haven't caught up to 9, and they definitely have not caught up to 10. Now, what I'm going to do is, if you slide down, I love my FICO. It's the only company that will allow you to see all your mortgage scores, right? All your scores, all your mortgage scores, all your FICO scores. But just for fun, I'm going to show you what her auto score looks like. So do you see the difference? So let's go backwards. Her FICO 8, her regular consumer score, was from either fair to good, 655, 670, right? Now, if she wanted to go in and get a credit card, this is what they're looking at. They're looking at her bank score 8, right? It dropped. It's at 633, 648, 645. Then her FICO score 9, this is what it looks like if that mortgage company chooses to use a score 9, right? But if they use a bank score 9, which is also new, they didn't have that a couple years ago. This is what it looks like. And if for whatever unrelated reason, I don't know any bank that uses this old version, but if they did, look how drastically different the numbers are. Okay, she would be denied. Like if they went by that. Now let's look at if she were to get a car. FICO score 8, FICO score 9. Again, I don't know what lender, aside from the housing, the mortgage companies, I don't know who's using this. So we're going to stick to this. This is what her auto score looks like. It is lower than her regular consumer score. And this is what her score 9 looks like. It's pretty bad. Okay, she went from a good to fair. Lastly, we're going to look at the, well, not lastly, we're going to look at her mortgage score. Pretty low. This, I have no idea what's going on here. When you see scores that are drastically different, I call it a lopsided credit score. That means that something is odd, or some companies are just reporting on most of the debt on one and not equally across the board, which is, unfortunately, they can do that. Now we're going to look at the newest version, which is the FICO 10 and the FICO 10T. See that? Look how low her scores are. Again, her consumer score, she was good to fair, fair to good, right? Now she's fair. Her score is just getting lower and lower. Let's see what the FICO 10T look like. So if any of the lenders chose to use a FICO 10T, this is what her score is, and this is what it was about 2 years ago. And that's what they're going to judge her by, unfortunately. Okay, and if she were to get an auto 10 score, this is what it is, and this is what her credit card score is under this FICO 10. It's horrible. But I like I said, I get into more detail when we in my other video. But just so you again have an idea, now I'm going to go back to sharing my screen and completing this. So again, let me know if you can't see my screen. Again, when you flip-flop with Zoom, sometimes it just simply, you just can't see it. Okay, remove this. All right, so now we're going to go into credit scores and interest rates. Okay, you can see it. Thank you so much. All right, so credit scores and interest rates. This is just a picture. Hopefully I tried to blow it up clear enough for you to see it, but it's self-explanatory, but this just gives you a general idea. It's not to the T, right? Of where you're at. Let me get my little laser pointer going again. What your interest rates would be based off of the credit score, right? This is just an average. It's different with different lenders, as we know, different parts of the country, we know that. But on average, let's just say that you have poor credit and you wanted to purchase a home. Roughly, this would be your interest rate, okay? This would be your interest rate on a house that was $250,000. I know you probably can't see that, it's super tiny. If you were to get a loan for a car, 18.9%, okay? The insurance rates go higher as your score gets lower, or your client's score. The credit card, look at that, same concept, okay? Now they do get better as your credit score gets better. Now, like I said, I always battle with this, right? Again, it depends on how your lender is, but good credit, excellent credit, very similar rates. It just depends on who you're dealing with. Once you get to a 750, it's equivalent to 850. All of that is the same. This is the same. Okay, but the interest rates are drastically different. Now, I know a lot of people are like, some lenders are like, listen, just get to a 730, you're fine. Really? Because look at the difference. You might, if you have the time and you can talk to your clients and say, listen, I know Tamiya got you to the minimum credit score needed, but this is what minimum gets you. It's still a 4.9 roundabout interest rate for your house. It could be a few points extra. Okay. This is for your car, for your home. I'm sorry, for your credit cards. Okay. Push them to work a little harder, spend a little bit more time in getting it fixed for a higher credit score. That's just my suggestion. But some people, we're in a day and age where people want things done yesterday. Okay. I get it, but you always want the best credit score. Or what I tell some people is, what I tell the lenders or some real estate agents, let them apply for the house, and then they can pick up and with me after they purchase the house, and we can take it from there. Fix whatever needs to be fixed, but I don't encourage anybody to settle for the bare minimum, not when it comes to credit. Okay, so now we're at Q&A. So don't worry, I'm going to be doing this nonstop. Okay, so if you have any questions, let me know. I guess he had to go and he wants me to reach out to him, so that's cool. But why do the major three have such a drastic difference in scores? The reason why is because it could be one of two reasons. They are three different companies. At the end of the day, Experian, Equifax, and TransUnion are their own entity, right? They work differently. And another reason could be because of the fact that the creditors don't have to report the debt on all three credit bureaus. They can report it with just one credit bureau, two or three, okay? Or the others. Some creditors will not report your debt with the major three, but they might put it on LexisNexis or Check Systems. Maybe they have some sort of discount with them. It is cheaper probably to use the lesser known credit bureaus. So that's why lopsided scores do exist. I like to tell people when it comes to TransUnion, Experian, and Equifax, they are like dealing with three different personalities. Like TransUnion is the easiest credit bureau to me. They don't really care about anything, and it shows. Like when I get deletions for people, usually the first round I get deletions within 2 to 3 weeks, and it's coming off of TransUnion. TransUnion could care less what your name is. They could care less. Like you could be Mary Poppins from La La Land. As long as you give them something saying that, they'll put it on there and they don't care. They don't fight too much. They just kind of roll over. So it's really easy. Equifax is the complete opposite. They're very conservative, very strict. They're very difficult to work with. A lot of companies don't like reporting to Equifax because of their rules. So that's another reason why you might see a drastic difference. You might see a creditor putting everything on TransUnion and Experian just because it costs too much sometimes to deal with Equifax. And it's just not worth it. But they're very strict. They don't like taking items off. I'll get deletions with the other two, but Equifax, they'll take the longest. It's so annoying. And then Experian is like the happy medium. I love working with Experian. The people are cool. They are fair. They're very fair. So, but most people use Experian. Okay. Maybe that's what Experian knows that, I don't know. So a lot of your debt you'll see good and bad on Experian, and I like to go by Experian a lot. Even when you're trying to apply for credit cards, I encourage people to apply for the companies that are only using Experian, because Experian is fair. So I know that was a long-winded answer, but there's multiple reasons. Can you opt out of credit reporting? Yes and no. So you would have to be off the grid, right? One of the ways you can be off the grid is by crossing over to the business side and moving your whole life, your personal life, from personal to business. And I do talk about that in my other videos. So now that I think I got this Zoom thing together with Alignable, I'm going to do the same videos over and over again. But that is one way to do it. And there's questionable ways to do it. Some people live off of what's called their CPNs. It's not illegal. Some people use them illegally, but people don't want their personal social security number out there either. So that's one legal way to use a CPN and to be off the grid and not have your credit reporting. But other than that, there's probably other creative ways. Yeah, CPN. I forgot what it stood for. I'll do a video on that, on CPNs, but basically people that are trying to be off the grid for whatever reason. It was huge in the 80s back in the day. It's not a fake social security number, but it was someone's social security number at some point. Yeah, it's a huge industry. It's kind of like an underground industry, so to speak, but it was really known back in the day in the 80s. And then anything that the government sees that will allow people to become wealthy and better themselves, they stop it or they have a problem with it, and CPNs turned into that. Plus, people were kind of abusing the system. So now it's if you use it the right way, it's fine. But if you abuse it, it's not okay. So let's say it's you purchase a CPN and you just want to buy houses and cars and stuff with that. You get credit cards, you build it like you would your regular credit, and you purchase things with it. That's the nice clean version of what a CPN is. Is the practice frowned upon? It's frowned upon amongst the banks because they want you to be in debt directly, right? And that's what all this is for. Then just like trade lines, like I do trade lines, and people that have no credit, they magically have credit within 30 days. I sell trade lines too. Sometimes people need that extra boost. And I've had many clients, several of them, they had no credit, zero credit. They were at like a 300, put them on a trade line. Once the trade line hit, their credit score was at a 730 within 3 weeks. So again, there's multiple ways to skin a cat. You got your CPNs, you got your trade lines. It's just different ways to maneuver, and CPNs is very popular. If you look it up on Facebook, you'll see a ton of Facebook groups that sells CPNs. Just be careful because some of the sellers can be scam artists. And I guess I can say the same thing about credit repair, which I have said that we come from an industry where no one really trusts us like that. So you have to find the good ones like myself. But yeah, there's there's ways you can opt out of credit reporting, and CPNs are one of them. Any other questions? What if I had a secured card and they kept messing up my ACH and overdrafting me? Now I refuse to use it, but they keep wanting me to pay a bill that should have been my deposit for. They keep wanting me to pay a bill that they should have my deposit for. So how I go about things would probably be extremely different than how you go about things. I fight everything. If it's on your credit, I guarantee you 9 times out of 10 that they're not reporting it correctly. And I would zero in on that. And that's why I said in the beginning, I'm a factual disputer. I don't care about the backstory. I don't care how this got here. If you're not following the law and that creditor is not reporting everything, 100% everything on your credit, 100% accurately, then it needs to be deleted. And it doesn't mean you don't owe the debt. You still may owe the debt, but it just needs to be off your credit report so your score can increase, and then you can handle them privately, separately via settlement or explain your case, right? So maybe you want to fight them or explain your case, show your proof, but you don't want it on your credit report. I would handle it that way. That is how I would recommend potential clients to handle it, because that's how I would handle it for them. Okay. But as long as you have the paperwork and you can prove that, I would take it even to a higher power. I hate dealing directly with the creditors. They always act like they don't know what you're talking about. They act like they literally will say, John Smith, we don't know who you are, John Smith. So prove to us who you are. That doesn't make any sense. You're calling me my first and last name, and I don't have time. So I will take it off my credit report so it doesn't exist, because nobody is going to see it once it's gone, and your score is going to go up, like I said, depending on how your profile is. But in the meantime, I would deal with them separately. I would file certain petitions, certain complaints, and that's what I do for my customers as well. Sometimes I have to do that because the creditors are not properly investigating as they should. And I have a problem with that. So I have to take it above the credit bureau's heads. So the credit bureaus are regulated by the FTC and the CFPB. And sometimes we have to go beyond that and reach out to them to fix the problem. And they seem to respond faster than the credit bureau. So that's another option. I have solutions for days. Like there's, like I said, there's so many ways to skin a cat. But hopefully that helped you. You have another question? Yep, you do. What do you charge, and how do I get addresses and names removed? I have a free thing for that too, so just send me an email or whatever. I use a company called Credit 360, and nothing has been reported yet. Got you. So my prices vary based off of what is needed on your credit report. It's pretty basic though. It's just, if you have very simple stuff like inquiries, it's pretty simple. Try to encourage the client to do it themselves. Most people don't. That price is separate. I don't discuss prices openly, especially not in a Zoom call. So you would have to give me a call or reach out to me. But I can say I'm the lowest out there. That's not something I'm proud of, but I'm trying to help as many people as possible. There is an initial fee and there is a monthly fee, and I allow my customers to cancel at any time. But the company, I don't like talking about other companies because everyone does things their own way. I am familiar with Credit 360. They've been out for a while. I didn't really think they were a company. I thought it was just another division of Smart Credit. And nothing has been reported yet. I used a company called 360 and nothing has been, do you mean nothing has been deleted yet? And if that's the case, how long have you been with them? I really don't care to have a year. Oh no. Was it anything heavy like bankruptcies, child support, foreclosures, timeshares? That was the most difficult thing I've ever taken off, but I did get it off. It wasn't anything heavy like that because it shouldn't take a year. No, I needed to report my rental payments. Yeah, that's an Experian thing. I used to report rent. Actually, I need to get back to that. But I used to report rent. So you would be a primary, and Experian does that. No, I needed to report my rental pay. But did you mean to say I use a company called Credit 360 and nothing has been deleted yet, or did you mean your rent wasn't reporting yet? I don't know what 360 is capable of doing. I don't really pay attention to my so-called competition because I'm pretty great at what I do and I do things drastically different. But I don't know. Nothing has been done, period. No rental payments, nothing removed. I'm sorry to hear that. Yeah, we get a bad rep. I'm assuming they took your money though, right? crap. I'm so sorry. Well, if you want my, you say, yeah, I'm sorry to hear that. I'm really sorry to hear that. I get that often. That's why I have, I make it easy to find me. Like you can find me on YouTube, Instagram. I'm not on Instagram a lot, but I have 5 Facebook groups. I'm on Alignable. My main group where you can see like a lot of my classes, free stuff, my results is what do I call it? Is it on the next screen? Let me see. It might be on the next screen. Shoot. Nope, it's not on the next screen. I gotta fix this. But it's called Credit and First Time Home Buyers Plug. You can find me. There's not going to be a situation where you pay me and you can't reach me. But that is a common thing with us credit repair people, and I am really sorry. I gotta look into that company because are they the company that is like a sky blue and white logo? I could be wrong, but if so, they've been in the game for a while. But yeah, it doesn't take long. I mean, especially if you don't have heavy items. Nah, like I said, I mean, I do hacks. My customers know I do hacks. I get in there. I ask for a lot of information so you can sign up, but once you give me the login for something, it's over. I get deletions. People know that. I'm big on that. So I get people in houses, I get them what they need. So it's not really hard. There shouldn't be any credit issues in 2023. All right, I'm going to wrap this up. Oh, it's the rainbow. Let me write this down. Let's go credit 360. Let's take a look at that because no, they have a credit score as their logo, the rainbow. Ooh, I think I know who you're talking about. Again, I think they've been in business for a while. Yeah, please do. If you want to set up a free consultation with me, you can. This is a really bad, this isn't me, by the way, but this is not the greatest work right here. But yeah, you can schedule a free consultation with me. Where did you find me at? Did you find me on Alignable, Facebook? Where did you find me at? Alignable. Okay. So if you go on Alignable, you'll see all of my information and you'll see you can contact me, free consultation. You can call me. I'm always working, always available. So just definitely let me know. But in the meantime, I'm gonna let you guys go. It's been great. Thank you. Thank you for coming. And I'm sorry. Yeah, no problem. No problem. I'm gonna have way more videos. I just had some issues with Alignable and they had their customer service was horrible. But yeah, I will talk to you. You have a good one and I look forward to speaking with you soon. Bye-bye.